The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is June the 29th. This is the Tiger Technicians Hour, and it is the same number to call, 877-927-6648, as you did for Steve Rhodes' show the last 2 hours. Great couple of hours. And being Monday, of course, we have our usual Monday schedule, which means that straight after me comes Larry Pesavento. Then we have Daryl Martin. We have Dave White. We have Tom O'Brien. Tom O'Brien, 4 o'clock till 6, wraps the whole thing up, gives his opinions on what happened through the day and what he's looking at. Great shows all. And let's go through what we're looking at here. Being Monday, start of the week, really close to the end of the month, and I sent subscribers today fascinating chart of the S&P monthly long-term going way back to the 1990s with a black background, because it's just that particular one has specificity that is different to the one with the white background. Of course, same chart, but the analysis is a little bit different, and also there are no technicals attached to that. It's just purely the chart itself, using a couple of trend lines for channels. Friday's reversal. Now, this is really interesting. I have a tool that I've developed over the years. So one of the myriad of tools that I have, I got this huge old-fashioned Sears and Roebuck toolbox, big toolbox, but we keep updating it all the time. We have kept in touch with every single technique possible that we can use based on the Chapman Wave methodology. And so we constantly update it. And we have, for instance, where do you need a plumb line? Where do you need a Phillips screwdriver? Where do you need an Allen wrench? Or maybe it's just that one moment that you need a little V-shaped chisel. Those are the things you want to be looking at. But together with it, there is a core of analysis. And what we're looking at here, I've spoken about this quite some time now. I said that that green line, that fast-moving average that I'm pointing to right now in the MACD, the moving average convergence divergence, 12, 26, and 9 are the numbers that you've got to be aware of that I'm using. In this case, the vertical lines, the red and green, not the gray. Let me see. You can see? Yeah, you can see it. The red line's under the 0% line, and the green vertical lines represent the move. The 9-period differential is that green line. That's made up of the 12 and 26 period exponential moving averages, and it's turned into a sum, a 9-period moving average. It's called the 9-period differential. And that is notated here. The big long gray bars are the volume bars. I like to have everything on the chart. I like to make it clean. Look at it. It looks pretty clean. You've got a lot of information. But the most important is look at that green line. That is the fast-moving average. And what I've been saying is that even though we have short positions in indexes, I have to be aware, and I want the subscribers to be aware, and I spoke about it on the show here, that until the 9-period exponential moving average closes underneath that red line, the green line closes under the red line, I have to consider that there's still strength internally. Therefore, you can have sudden moves to the upside, even a possibility of a technique that I call the Chapman Wave Rogue Wave. That's the identification of where everything is coming down, but there is that one moment where the stochastic suddenly moves higher, everything moves higher, MACD might not cross positive, and sometimes it's the MACD fast-moving average itself that does it. But one of those technical indicators, in this case the stochastic is actually moving down and that fast-moving average is the one that is left, has enough strength, enough look-back period strength to say, hey, be careful, there is enough energy here that you can get a sudden spike to the upside. Well, on Friday, one of my technical tools, the Chapman Wave Trend Gauge, all it is basically is Richard Arm's trend gauge with numbers that I have chosen over the years to look at as key inflection or deflection points, gave a signal on Thursday that regardless of what happened to the futures overnight or even perhaps very early in the morning, at some point there will be a rug pull in the market. The Dow it's always the Dow in my technique that I use, the Dow should go lower, and then there should be a rally attempt, but until that downside momentum is concluded, you will not get a successful rally. Well, of course, later in the day there was. At a minus 150, the Dow turned around and soared to a slightly positive close. That's that 9-period moving average. But you know what? It really didn't affect that 9-period moving average. Why? Because that's a look-back period. When you listen to Dave White and he talks about these technical aspects, he talks about the technical aspects as being independent many times of a price move. In other words, you could be looking at a price that's going up on light volume, but if you look at the cumulative price movement, the volume movement, it is saying there isn't enough strength to maintain that move to the upside. You don't know how long always, you don't know how long. There are other techniques that show you how far it could go, but it's saying that that's a divergence worth noting. And in this particular instance, the divergence was a positive one, which I believe usurped its energy Friday as short covering, the surprise move and strength to the upside, and short covering took the market, general market, higher than you would have expected. Within that context, I'm looking at this and I'm saying, I don't care if there's an upside move. I want at least this point to stay short in the sectors that I've chosen. Number one, 3 sectors. And number 2 is I want very much to be looking at where there's strength, because I'd like to add to that strength, what is holding up very well. And yeah, we took a little nibble at a stock we've been in and out of. We had as much on the upside as we did on the downside, 10 cents, 8 cents. Another stock, because when I look back, and I showed this to, talked about this for subscribers this morning, when I look back at the stocks that we've had that are identified as major turnarounds after massive declines, and then we got out too early, there are a couple that we've held very nicely for quite a long period of time. But there are others. Like I just saw IPG go by, Interpublic, an advertising company. I mean, we had that way back, the 6s and 7s or something. Now it's trading up in the teens and got a big bump today because of some takeover. I'm trying to identify the stocks that I think are the Rip Van Winkle stocks now, where you can buy them and hold them regardless of what the market does. Now, am I going to be able to hold on to that thesis? I don't know. The market will tell me, but I'm attempting. And so far we've had some success. We'll see if that continues. So now let's just run the numbers down. The S&P is minus 56 at 15,501. The comp index is down 12 at 3,600. The S&P is down 7 at 1684. You've got gold up 7. Now, I like gold. I like the action of gold. And I also think that what we're looking at in terms of gold is that this is a very strong counter-trend move. One of the reasons being that the dollar index, I've got this is the S&P E-minis I've got here. There's an alternate count. It's a B or a C, but that's not the root. The root is the S&P, and my S&P index, I'm going to move back again in a second to the gold, has made a peak E. I cannot put a down arrow yet, but if it closes decisively under the 9-period moving average today, days young, who knows, and the S&P, the MACD crosses negative, then the stochastic at 85% says, you know what, you might have a sell mode in your 120-minute chart, but that's not the issue. The issue is, what are you doing? Peak D, a sell mode, is in fact in place right now in the 120-minute chart, but I'm very strict with my rules. Not only that, I could put the down arrow and you could suddenly get a mini buy signal and you could go even higher. That's not the point. I'm very strict with the rules. The down arrow stays, then I have to use that little inverted V if there's like a right arm extension or a rogue wave to the upside, and then it turns down. Or it could recycle higher. So now let me go back to the gold. When I'm looking at, I'm going to go to gold contract. I see that I'm actually I did some upgrading, so I don't know. I believe that I'm now, what is the gold? Up 750 I'm up 870. I'm a little behind, but not that much. See, I've got a peak D after a doji candle high. 4 peaks to the upside. That's the Chapman Wave methodology. That's where you start to look at other techniques that I love to teach in my Master Trader series, and we'll be setting some up coming up soon. But in the meantime, look, it's walking the 9-period moving average. That was the horrible resistance. Now, finally, it's support. So I like the gold action. I think it's terrific. Silver is at this particular point up 0.08 at 19.85. Now, platinum at PL. Let's see what I can get here. Platinum is doing very nice. I don't believe this. I spent all the time. I did my notations. Not here. A, B, C, D, A, F, G. Okay. So this is going to be, let me just put the up arrow in. Here we go. Arrow, that's A. That's B. I actually worked there. Good. C and D. See, same as gold. The metals are doing the same sort of thing. Nice move to the upside, calling it a counter trend move. And at this particular point, platinum is at 1.445. And if it breaks above 1.464, this week it's going to extend leg A, or it might make peak A, but so far a real nice action. If we go to crude oil, CL, I think I'm going to go to Q. Let's see what happens. Yep, crude oil is a peak C, pulling back. I suspect that there will be a leg D above the 109.32 area, but it's becoming very toppy based on the technicals in the daily and the weekly. The monthly chart is still actually very good. I should say that the weekly chart is still very good. I am getting some sign that says it's a little bit toppy. Now, a couple of questions in the den. I'll go through those as well. But I also want to look at bonds. The TLT, now this is fascinating to me. The TLT has made a very quick peak ABCD. And now it's from the doji candle. I love these doji candles. Pulls back quite sharply, but it's still holding above 106.17, the low of early July. And now that's going to be very important, because if you look at the big picture says, while the monthly chart is still very negative, the weekly chart is starting to flatten out and is trying to show support here at the 106s, between 107 and 106. If by Friday afternoon, there is, in fact, a confirmation by, Friday. That'll be great, because Friday will be into the next month. It will have already started the next candle of monthly charts. And if you look at the monthly candle of the iShares Lehman 20-year Treasury Bond Fund, the 9-period moving average is at 115. The price is at 107.5. The MACD is very strongly negative, and the stochastic is still negative. So that says to me, bonds could be in a trading range, but there's a real good chance that the 96 level over the coming weeks is going to be a target. That's a 9-period exponential moving average that has been tremendous support up until now. It's still a bit away, but that's looking out. And the final thing is the dollar index in the monthly. I was asked if I'd show the chart. There it is, the dollar coming up. I'll be back, 877-927-6648. The Dow is down 65.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians. I see we've got a bunch of callers, and I won't be able to get to some of the stuff I wanted to do. But meantime, let's go first to Travis in St. Louis. Hi, Travis. How are you?
I'm doing just fine. Good morning, Basil.
Yeah. This is very interesting because you wanted to look at.
I want to look at ISRG because I've kind of really lightened up on my long positions the last couple of weeks, and I'm kind of looking at it. I haven't really laid out a lot of shorts yet, but I still see some, like you've been kind of talking about. There's still enough strength in the market. You may still get a sudden pop higher. And I'm trying to see if there's still a couple of names here that look like a decent setup, and this one here looks to me like it could.
Okay.
That lower gap at 415.
Let me just say there were two conversations going on here. You are not long ISRG. You have longs in your portfolio, and you've been lightening up, and you are looking at the short side. That's what I wanted to clarify. Good.
My long positions are shrinking relatively quickly because of some of the great profits that have come over the last couple of months. But this one here just looks like it shows enough strength that it may have enough to pop up towards that 415 area.
You know, it gives me an opportunity just to talk about a couple of things. I'm going to make a big deal out of this. There are some stocks that actually broke out and are showing very nice strength. And I think this is now not just a bifurcated market in a rotational that's already started a rotational correction. I think this market, I could be wrong about this, but I think this market is starting to identify new Rip Van Winkle stocks. Those are the stocks that you buy and you hold and you close your eyes. You buy them when you least want to, but they're showing the kind of relative strength as opposed to the weakness in some stocks. They are holding up really well. That doesn't mean to say that they're going to fly and they're going to just go to the moon, but it does say not only will they hold up, but if you see on negative days that they are holding and actually moving higher, there's a good chance that you've identified the next leaders, and many of those leaders have been absolute dogs for a long time. So now I wanted to say that. Now we've got the exact opposite in Intuitive Surgical. There was nothing that they could do that was wrong. Everything they did, everything they said, just took this thing to higher and higher highs. It went from 84 back in 2009, and that had held pretty well, although it was 360. In 2008, it plunged down to 84.86, but it held the 200-period moving average. Just look at the chart. That's fantastic action. Then what happened? It had a huge leg A, pulls back, and then starts a mini ABC, breaks out with that C. That was very important, and goes all the way to 594, creates a cup formation. I love these formations, where there's much higher technicals at the first high of 594.89, but the second high just 9 points lower at 585.67 said, February of 2013. I'd already been talking about a possible hat-trick top in Intuitive Surgical, because everything that happened along the way up just was met favorably. But then all of a sudden, the stories that you had actually read before about maybe not everything was as kosher as it could be, and there was a little bit of obfuscation, and the stories that had been kind of held back were coming out. All of a sudden, it looked as if the price concerns, the fundamentals, the technicals, and everything, it came together to say there is now a complete divergence between the high that was made at 585 with a falling monthly MACD deflecting lower, and the stochastic way lower. So I'm in agreement with you. This is absolutely, now the tough thing is it had that incredible 90 point or whatever it was decline on the earnings or whatever the report was back in the week of the 12th of July. What do you do now? Well, there are a couple of things. One is the 200-period moving average at a 413. ISRG is trading at 390, up $7.84. It gapped even higher today. Obviously, there's some news, but this looks like it's got a real problem to it. Now, how do you play the darn thing? Because it's down from the 580s down to the recent low of 357. It's very tough to do, but if you identify that the tide is turned, and that even if you are wrong on a short term, I don't mean short, but a shorter term basis, lower lows and lower highs should be the order of the day for Intuitive Surgical as it starts heading towards, and the way that I would look at it is that the first real major support is in the candles of October of 2011 at 341, and then 320 round number low of August of 2011. So give me a second here. I'm going to talk about it, how I would consider. First of all, do you do options?
Yeah, I was thinking about just a counter trend bounce and maybe a buy in like a couple
Right.
week option.
Okay. So then when I get back, I'll discuss the plan for you. We'll be back with Travis, Mark, and Mike.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Now we're looking at ISRG, Intuitive Surgical. Now there are a couple of things that we're looking at. We're on with Travis in St. Louis. Travis, I'm just going to say, if it's very difficult to say how much it can pop on a bounce, but everything about this chart tells me that the institutions didn't even get a chance. Twice now they've had no chance to get out from the 560, 570 area. Mm-hmm. There was a chance that they wouldn't have taken because it was holding so well in that period in April after the first 3 bars in the weekly chart of the big decline. And they must have thought, oh, you know what, this could still rally. And then when it just dropped, they stuck. My sense is that the high volumes are going to be to the downside, telling me that the institutions are going to be selling into strength. So if you could look at I would sell premium. That's probably the best way to do it, because I think very limited, a major rally would take it to 413 is the strong resistance, but 439 is the 9-week moving average resistance. Can it get there? Obviously, anything can get there, but everything about it says it's probably going to fail with the high bar of 3 weeks ago at 428, if it even gets above 413 in the next week or so. So I would use that as your benchmark, and I would both sell and I would look out much further for a put strike somewhere around the 370 to the 360 area, but give it time. And that's the way I would do it. I don't know if I'd even waste time actually shorting the stock. I shouldn't say waste time. I would short the stock, but I think using up that kind of capital, it's far more beneficial if you identify the major trend to be able to look at using the premium. One side will be premium that you're trying to extract, and the other side will just be a pure downward play on the strike. So I hope that helps you.
Absolutely. Thanks, man.
Thank you very much, and great question. So let's go to Mark in Denver. Hi, Mark. How are you?
Good. How are you doing?
Very well, thank you.
So I'm looking at a put position on DVY, which looks like it tested its left side on really light volume, but I want to kind of get your thoughts on daily, weekly, and monthly wave count.
This is a very interesting stock. I looked at this a long time ago, forgot about it. I lost all the notation on my charts, but I've got them back. Took me just a moment to put them back. Now, the big thing about this is that the monthly chart is still very strong, and this is DVY, is a symbol, trading at 67.24, down 13 cents. It is the iShares Select Dividend ETF. Now, it's really interesting because there was a tremendous dividend play for about up until maybe 2 months ago, or 3 months ago, the dividend stocks had a fantastic run because they were considered capital gains and dividend gains because they were. Now I don't know the mix of how they work it into the select dividend. In other words, I haven't had a chance to look at which stocks they're actually using, but my guess is
the top 10. You want me to give you the top 10?
Okay,
top
sure.
5. So 4.15% is Lorillard, which is LO.
Okay.
And then 2.3% is VF Corp.
So they're probably going to have Philip Morris or PM.
And then the next two are Chevron and Entergy. And then
Right.
Kimberly Clark are all about 2%. And then McDonald's and First Energy Corp. And a few of those.
You see, it's fascinating that you say that because I have almost the same count with CVX, which is Chevron.
Right.
Now, let's talk about this. You see, if you're looking at my charts, folks, there's a chart pattern that during one of my Master Trader series, I jokingly said, oh, my God, that looks like a Groucho Marx eyebrows top. What is the Groucho Marx eyebrows top? Let me just draw it in here. It looks like this. 1, 2, 1, 2. And it's like a V. Actually, over the years, I've begun to think that it's more like a crow. You remember they used to have the cartoon series with those crows? Well, it looks like a crow nose. So in other words, it's like a V-shaped pattern. And the reason why I call it the Groucho Marx eyebrows is because it sort of hung out just for a moment at the top, and then it pulled back. Then it made that, I call it the schnoz, the nose right there, and then went all the way back. And it was quite significant because if you noticed it as a V-shaped pattern that was failing, and you just kept in your mind the two eyebrows, it became a fabulous benchmark, just a visual. I like to use visuals because it just makes it so much easier. And in this particular instance, that V-shaped pattern says be really careful because if it fails, and if Chevron goes down below 123.95, it's only 3 points away. That's a failure pattern, almost like the cup formation that I call the drop bucket pattern. So let's go back to your DVY, and let me show you what I'm looking at. If the reason why I mentioned what I thought would be included in there, probably there somewhere, is either Philip Morris or MO. M-O.
I didn't see Philip Morris in the top 10, but this Lorillard is 4.
Well, also, and Lorillard is L-O, isn't it? L?
Yeah, I think it's Ultra.
Yeah, Lorillard. Okay. So that's in the tobacco area, right?
Yeah.
So, okay. But that's got the big U-shaped pattern, so they all have the same pattern. I think you're absolutely right, looking at this as if to say, hey, the makeup of this particular chart is indicative of a chart that has the potential to pull back. It hasn't done it yet, and the MACD is still very good, and it's made a peak D. Stochastic still at 86%. Here's my recommendation. You can start a position, but you've got to know that there's a chance for one more spike just to retest. It's at 67.19 to retest 67.71. It could even hit 68.25, somewhere around there. But everything about it says that there's a good chance that if it takes out 67.19 right now. If at any point in the next week and a half to 2 weeks, it takes out 66.77 on a closing basis, it has to take it out. The MACD will turn down. Stochastic will break underneath 82%. You want it really under 80%, but it'll be the start of a move down. Now, this pattern doesn't very often hang out at the top. In other words, I would not put a rectangle next to this. It just doesn't usually do that. Either it's going to break out upside, be very positive, or it's going to break downside. My thinking, which might concur with yours, is that it's actually going to slide and test the 66 9-period moving average in the weekly chart. So here's my strategy. As far as you would be looking at options, or you would go short?
Yeah, I'm thinking of September puts, like maybe in the high 60 range. It looks to me like it might. I think is it just a leg C up on the daily, and if it hits that 60.
Yeah, I've got D in the daily, right?
Okay, and then it's tested that left side over from 522.
It's not only tested it, but it hasn't yet held above it, and that would be 67.60. If it holds above it, then you've got to expect at least another 2-3 bars of upward movement. I think you're right, and I'm going to also suggest something else. Because you're looking at September, you're not going to really make money until this thing breaks down. And you're looking at, if it gets to the 63, you're going to be looking really good. But you might, at 65 or 66, you might just be looking at something that's giving a little bit of a profit, but nothing like as if you were short the stock. But that's the risk factor that I like, because there is just enough upward strength in the daily to say, I could hang around you just a little longer, and that might give you a second entry point. So a nibble here with the objective of saying, hey, I'd like you to bounce a little more. I want a better price, because if you can get it closer to the 67.50s, not very much further away, but in a dividend stock type stock it is, then you're starting to get even a better premium. And you want the premium on the way up. That's when you want to be buying it, because that's when the premium will shrink on the put side. So I like your idea. I think it's going to turn out to be a very good one. But you know what? You will know if it lasts more than 3 weeks without closing under 66.08. You'll see your premium shrink a little bit, but it could say, hey, you know what? I might just be something that's going to hang out. It doesn't usually do that in this pattern. Good call. Good idea. Thanks for calling, Mark. Mark in Denver. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Have you looked at Ulta?
I certainly have. I certainly have, and I noted it. Oh, I'm getting a little tired of this, and I know that trade stations are working on the problem, but gee. All right, let me just do this because I can do it A, B, C, D. It's already made a D in the weekly. The monthly is getting a little toppy, but it hasn't yet tested the previous high of 103.52. This is Ulta Salon Cosmetics and Fragrances. This is a stock that we once had in my opening call, got out way too early, identified it as a really nice mover, but you know what? Sometimes you've got to have the patience to stay in the trade. So you're looking at this, and I would suspect that you think it's getting a little toppy.
Yeah, I think this is going to set up for a very nice short trade.
I absolutely agree with you, but it's how you play it. Let me just finish the notation on the daily. Okay, much clearer. Here's my suggestion. I have a stock that we shorted. I don't have it anymore. We didn't short. We bought the puts on last week. It looked like it was doing well, and then out of the blue Friday, it had exactly the same kind of move. It tested the left side and then had a spectacular move on a daily basis on Friday, and today it's giving back a big chunk of it. I think that's exactly what's going to happen here. But here's the thing that I'm always a little nervous about. This is a favorite of institutions. You know it's a favorite of institutions because it's in Investors Business Daily, and the way it's performed when it gapped down. I'm trying to put different studies together. There's a gap down that says when it gapped down on the 14th of March, it closed at 88.37. The next day, it plunges on the 15th to 72.51 low. That is huge. But that was the low. Who would have known? That was a volume spike. That's what I call the climactic volume spike low bar. And that right there is a great example. It's the highest volume it had had. Let me just squeeze the chart. You can see. Yeah, that's the highest volume it had on any of the down moves. I'm not going to be able to go back in this amount of time. Yeah, I can. Let me just go back. Let me go back. Oh, there's the other one. That was back, but it missed the actual day. 4.6 million. And this one was 13.8 million, way more. So that's what I call a volume climax spike. And that can take you between 28, 38, or even 52 bars with higher highs. And then what does it do? Just to really, that was the second huge gap down. And people fund managers must have thought, oh man, this is going to go even lower. Then what happens is it goes steadily, peak ABCD, peak ABCDEF, peak ABCD, that was the last one. And there's a huge gap, and it hasn't filled the gap. It's gone into the gap, it hasn't filled it. Here's what I'm looking at. I wouldn't be in a hurry to short the stock because I want a trend change confirmation. I haven't got my eye says there's a trend change, but the price says, if I have the kind of strength to move up, whatever it is, even if it's short covering like on Friday, I've got to give it just a little more. So I'm going to say you might be sacrificing points. But if you want to start a position, a small position, if it closes below the 9-period moving average of 97, I think that's 64. But if it closes at 97, I'm even going to say if it closes under 97, I would start a small position on the short side. You see, I'm sacrificing something here. A point and a quarter, it's not a big deal for a $98 stock. But then all of a sudden, the 91, 81, 200-period exponential moving average becomes the target on the downside. I want that. At this point, I don't have it. So that's number one. Number two, I would put a stop at 100.48. That's 1 penny above Friday's high. And the other thing is, if it breaks, you haven't got a short position, and in 2 days' time it's broken over that, you've got to wait for a retest of the high of 101.48. Then call me. We'll look at it together. I'm not going to say set up a short 1 penny above that peak D. My eye says absolutely. My eye of the weekly chart says no, there's still strength. The monthly is the one that says to me, this thing is going down. When and how are the questions, and that's what we'll do. This is actually on my wrist. I've got it in red. I've written it down. I wrote it down with a couple of others, big cap stocks. I've written it down as one to watch. I don't have the confirmation yet, but I can tell you that I would actually start a small short position under 97.
Okay.
Okay, thank you for calling. Good eye. Thank you for reminding me about that. Let's go to Dan North Reading. Hi, Dan. How are you?
Good. How you doing, Basil?
I'm well, thank you.
So I'm in this Genworth stock, and I believe they have earnings coming out tomorrow.
Tomorrow, huh?
And it looks like the stock is kind of weakening, and MACD's on the cusp. So,
yeah. All right, now let's look at this. And this one, everyone knows I notated because I, in fact, had this all done, and there's notations gone. And as I say, trade stations try. I think there's an issue, and they are trying to deal with it. There are not enough people. Let's just be blunt. There are not that many people that notate the way I do, so it's not a big priority, but I know that they are working on it, so I'm going to be the break gives me an opportunity. I'm going to look at GNW trading at 13.17, Genworth, and I had notated. I'm renotating it. I'll have it all done within the time we come back. And I also want to, for Jay, who emailed me, who wants to look at Baidu and GLNG. We'll look at those as well. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
That makes people come up to folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Don't forget, great program today. You got Larry straight off me. You got Daryl. You got Dave. You got Tom O'Brien. Just great shows. So we're looking at GNW, which is Genworth Financial. And I love the chart in terms of the monthlies just starting to flatten out, stochastic. Just straight off the bat, I'm going to say that if this had to pull back towards, it's at 13.17 for whatever reason, towards the $11.25 to the $10.60 or 50 cents, I'd probably want to look at this as a buy. I think it's starting to really build some nice upward momentum. On a weekly basis, this is peak E. If there's no new high, the MACD's at 94. The MACD is very strong. Stochastics at 94%. It is turning down. No evidence yet. So I've got a couple of alternate wave counts. I did it very quickly. My preference would be to call this ABC and actually call it new leg D, a peak D, but I've actually got it as a G/C. But that's not the issue. The issue is the MACD is turning down. Stochastics at 71%. If there is a surprise, I got a feeling that there's going to be good news, but it's going to sell off on the news. That's my feeling. On a purely technical basis, I have to say that if it pops up, it's not very difficult to, at 13.16, to get to 13.80 to start another leg up, but that would be your risk. Everything about this is saying that even if it pops up one more time, the weekly chart 9-period moving average at 12.29 and the 200-period exponential moving average at 10.34 says, because it's the first time that it's gone above this in such a long time, that there's a real good chance over the coming few weeks it's going to try to test between 12 and 11. That's what I'm looking at. So, do you have a position? Is this a position you've got and you're just wondering what you should do?
Yeah, I'm currently long in it.
So then let me recommend this. It's had a fantastic move. There's really no harm, because I see later on that it will be coming back to between 12 and 11, even if it pops up, in taking some of your profits off right now. Don't just jump in and do it. You got the whole day. Think about its action and what it is to your portfolio. My recommendation is to take some of your profits right now. It's a fabulous move, but it's walked the 9-period exponential moving average until it closes under $12.20. That 9-period moving average has been fantastic support. So it's a point away. Do you want to fuss over a point? I actually think it's worth fussing over a point because it's had a fabulous move, and it is leg D up in the monthly chart, so you need to be a little bit cautious. But as a core position, I recommend you hold your core position, and the money that you take off, maybe dedicate some of it to putting it back on if it has 12 to a 15% decline over the next 3 weeks or so.
Okay.
And if it spikes up and it holds, you're in. That's great, but you've taken some money off. There's nothing wrong with that. So think about how much and what you do. But I like the chart looking out. I just think short term it's going to pull back. Hope that helps you.
It does. Thanks, Basil.
Thank you very much for calling. Always appreciate it. That's Dan North Reading. Now let's just quickly go to this. I was asked about Baidu. Now Baidu has had a spectacular move off the lows. It had a spectacular move on the way up to a peak F-top way back in 2011. In July, it went to 165, and it pulled back all the way down to the 82, 83 level. This leg A up might turn into a single leg A, because it's in leg E in the weekly chart, a spectacular move. If you are long, and I'm not sure, I think that the person is already long that asked me about it, I'm going to recommend taking a little bit off. That gap should be filled. It should come back. It's at 128. Baidu, B-I-D-U, is looking great, and 117 will be support. And you asked me about another one. I've done some work on it, but I'm actually going to do a little more work this evening on GNLG, which is Golar LNG Limited. They're the largest LNG carriers, and they operate carriers. So I'm going to look at that. It actually looks quite good. Thanks for being here. Stay tuned for Larry Pesavento. Don't forget, my service is the opening call. Go to the front page, check it out. Be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.